Happy Sunday, guys. I hope you're all having a great weekend, getting some well-deserved rest, I should hope. So it's that time of the day where we go over the watch list for the week. Now, there's not too much here. A lot of this relies on the Fed cuts, so I'm not going to go into that in this video. You know, there's lots of news articles and other content creators and things out there about the rate cuts, and I did a 40-minute webinar during the rate cuts as well. So yeah, that's something we'll sort of leave on the back burner and refer to. But first up, we have copper. So copper prices are expected to benefit from global monetary easing, particularly as industrial activity in China and other emerging markets picks up. The Fed's dovish turn, combined with expectations of stronger global growth, should boost demand for industrial metals like copper, lowering borrowing costs worldwide and increased infrastructure spending, especially in key copper consuming countries, make copper a strong buy. With reduced USD strength, commodities priced in USD, such as copper, will likely appreciate. So that's what we can see here. Now, if we have a look at the charts, copper's technical analysis is very, very, very simple. So what can we see on the daily? Well, we've got a very clear resistance up here at 4.65. Now, I think, it's very obvious, and I think a lot of people buying copper will be eyeing this level. So I think I'm quite happy to have this as sort of a longer term target. Now, don't forget, this is the daily time frame, so this isn't necessarily going to be a quick sort of day trade or swing trade. This might have to be held for a couple of weeks, which to me is completely fine. Now, if we zoom in a little bit on where we currently are, we can see we've got this daily resistance that has been broken out. So Thursday's daily candle closed above with rather strong bullish momentum. The problem is Friday's candle had the opposite, essentially. It was a lack of momentum to the downside or upside, but mainly to the downside. So essentially what we need to do is go onto the H4 to obviously look for our execution points. Now we can approach this one of two ways. We can go for the simple TA, so simple technical analysis, kind of like what I've drawn up here. So we can look for this trend line. I mean, there's actually a few different trend lines within this area here, but I'm not a trend line trader. I'm not going to get mixed up in all that. I'll just draw up what I see. And this one to me at the moment is the most clear. Now, we've got this previous resistance here that I mentioned. So you can see price broke above. We cleared this level quite nicely and we are coming back down. So to me, this looks like quite a nice area for a retest, and maybe we'll come a little bit lower and potentially test this trend line again. I'm not sure about that, and I don't really care if we have a tiny bit of drawdown for this trend line. The other thing to back up this movement is the moving averages. So you can see we had the 200 above the 50, then we've switched over now. So now it's the 200 below the 50, which indicates a bullish trend. I apologize, my camera keeps freezing for some reason. Let's try put it there. So yeah, we're looking for a buy on copper, essentially. So the second approach we could go for is using the fib. So you can see here, the fib would give us this level, sort of at the 4.18 level. The problem is I just don't see this level getting hit. And the reason is because the moving averages are already above this level. We've got the trend line above this level. We've got this nice resistance. More factors point to this level of resistance acting as the new support rather than this fib level. So we will keep an eye on that. Obviously, we won't just automatically enter off this support. We will look for our entry criteria, normally, which is just a clean bullish engulfing candle, just to confirm the momentum is bullish. But yeah, technically and even fundamentally, this trade looks great. Now, moving on, we have euro dollar. So if we look at the fundamentals, the euro has strengthened post FOMC as the Fed's dovish stance suggests further USD weakening. The euro is benefiting from a combination of factors: declining US yields, improving sentiment in the eurozone, and a weakening dollar. The Fed's 50 basis point cut, along with potential further easing, makes the USD less attractive. Meanwhile, the eurozone continues to see capital inflows due to its relatively higher yield environment. With inflation stabilizing and the eurozone and no imminent aggressive easing expected from the ECB, the euro is set to gain against the US dollar. So you can see there, very simple economic factors, really. The problem is that I see is sort of the higher time frames are presenting a little bit of a problem. So if we look, we've got rather strong resistance through here on this weekly chart. So we've got, resistance previously, then it turned minor support, and it's been acting as resistance since July last year, so 2023. So if we can break above this level, we could expect a huge move to the upside. So the first target would be here, which is the 1.14. And then from there, we could start looking at where is the next level of structure? Well, it's kind of here. So we can start looking to buy potentially around here, which would be the 1.169 to 1.17 roughly. So that's the first thing, is we need to pay attention to if this level is going to get broken. And I think it will. It just might not happen quickly, or it might happen very, very rapidly and not leave as much time to get in. So we will need to monitor this one quite closely. Again, there's two approaches I'm willing to take here. So I'm looking for either the break of this level and the retest and a continuation to the upside, or I'm looking for the pullback. So I'd be looking for this 50% move back to the downside before we head back to the upside, and potentially test this next level of resistance. So there's two things to keep in mind there as we go forwards, but yeah, this could be quite a nice play to take as we head into the next couple of weeks and round off the end of the year. Now, the next one is the Australian dollar against the US dollar, very similar to euro dollar. We have the Australian dollar being highly sensitive to global growth and commodity prices, expected to benefit from the Fed's rate cuts and general easing in global monetary policy. The Australian dollar is typically supported by rising commodity prices, especially in metals like copper and iron ore, which are expected to perform well in low-rate environments. Additionally, as risk sentiment improves globally, the Australian dollar tends to appreciate due to its status as high-yielding currency. With USD showing signs of weakness, AUD/USD has upside potential. So that's actually looped around to our copper idea that we had previously. So if we can see our copper play move quite nicely, then this Australian dollar trade might move quite nicely as well, as they are quite intertwined, as you just heard. So you can see the analysis is basically drawn up here. So we are looking for a very simple technical play. We're looking for this level of what was previously support to be broken and retested as new support. Something like this, so down to the 50% level, enter off structure and enter off the fib, and ride it back up to the fib extension at negative 618. So this one's very, very plain and simple, really. There's not too much to cover. It should be quite self-explanatory. Now, the pound Swiss is one that I've been watching for a while. It's one that elite traders, in terms of the staff, have been waiting to get into. So we saw this break of this level of resistance that we had through here. However, we haven't really come down to retest, which was a little bit frustrating. So we are waiting for an entry here. So what we can see again is the moving averages. We had the 200 above the 50. They've now swapped over into a bullish trend. So we're looking for some sort of pullback. And the catalyst for this was the Bank of England holding rates at 5%. Now, we also have the trade balance for the Swiss not looking too hot. It's declined again. So this is kind of a no-brainer trade. It's just where we can get in is the question. So this one isn't relying too heavily on technicals. We are just waiting for a very simple pullback here. Now, the Russell is an index. It's very similar to the S&P and the NASDAQ in terms of it's got, obviously, it's an index. The difference is the Russell contains smaller companies compared to the S&P holding obviously the largest companies. And due to the rate cuts, we can expect smaller companies to benefit more, obviously pushing the Russell up as it's cheaper for them to take loans with lower interest rates. So again, we're looking for a very simple trade here into the 50% retracement level. And then we're looking for this level of previous resistance to get broken, retested, and then continuation to the upside. We can also see we've got 200 moving average here that potentially could come up and meet at this 50% level quite nicely. So again, pretty simple trade. Should be quite easy to execute on if we can get that pullback. Gold is the next one. So obviously we've got quite interesting factors for gold at the minute with quite a lot of drivers. So we can read the economics here. We've got gold continues to be a strong safe haven asset. Amid the currency market volatility following central bank decisions, the softening USD and uncertainty around global growth makes gold an attractive asset. With the Fed's with the Fed's rate cut and potential slowdown in further rate hikes, gold could see continued demand going long on XAU USD, could capitalize on its safe haven appeal and hedge against further market uncertainty. So we are obviously banking on a lot of the global tensions as well with Russia, Ukraine, and the Middle East. We've also got US elections coming in November. It's not out of the question that we could see a continuation of inflows into safe havens like gold and the Swiss. So gold's currently at all-time highs. We've been breaking all-time highs basically all day on Friday. You can see this momentum we had. So what I'm looking for is some sort of profit-taking dip. So we've seen this multiple times previously. So again, here you can see on the 17th of July 24, we created an all-time high. We had a really strong, almost 5% drop-off. And then a very similar thing here when we retested these all-time highs, we had another 4.5% drop to the downside as we saw profit taking. So it's not a case of there's negative factors for gold. It is just a case of people need to get out of positions as gold keeps going higher. So we are looking for a very similar move here as we see a potential 5% move to the downside or 4% move to the downside to retest this previous level of resistance, which was obviously the old previous highs. And then we can enter on the retest of here. It's very similar to what we saw previously when we created these all-time highs here back in July, when we got stuck and sort of consolidated, and then we finally broke out and used this now as support, looking for exactly the same movements. So yeah, we'll see if we get that. But yeah, that's it for today. So I hope you enjoyed the video. I hope you got some value. Leave a like and subscribe. You can join the Discord, first link in the description, and I will see you later. Have a good week.